Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today.
Good morning. It's Monday, February 16th, and this is your New York Open Prep. The big threads today: energy and geopolitics are reshaping crude flows. Central banks are back in focus with New Zealand up next, and Europe's soft data tone keeps the euro on the back foot. On geopolitics and oil, Washington and Tehran are signaling openness to talks ahead of meetings in Geneva, with U.S. officials stressing a diplomatic path. Meanwhile, China is set to take record volumes of discounted Russian crude this month as India steps back from spot purchases, a reminder that trade routes are still shifting. There's also a structural story with reports that the U.S. shale boom is entering a slower phase over the next few years, even as Norway's Equinor announces a new North Sea find near Gulfix. Net-net, near-term risk premium may ease on dialogue, but medium-term supply looks tighter if U.S. growth plateaus. Turning to Europe, sentiment is fragile. UK consumer confidence slid again in February amid rising concern about debts and tighter loan availability, and appetite for big-ticket spending is at a 10-month low. Analysts still see UK inflation easing and the labor market stabilizing, while in the euro area, December's industrial output disappointed, though some expect the cyclical recovery to hold. European stocks are modestly firmer to start the week, but a notable laggard is software maker Dassault Systems, under pressure as AI concerns linger. In currencies, attention is on the Reserve Bank of New Zealand. Markets expect no change to the cash rate this week, but see a risk the tone turns more hawkish after signaling November's cut was the last of the cycle. The euro is drifting lower against the dollar, and the euro also softened versus the pound after the industrial data miss. In emerging markets, the Turkish lira remains under pressure as inflation expectations rise and external balances worsen. North America has a mixed macro pulse. Canada's January inflation is expected to cool, while December manufacturing sales beat by a touch, but inventories fell and housing starts missed, hinting at soft momentum into the year. On commodities, talk of partial U.S. aluminum tariff tweaks offers little relief, with the core levy unchanged and domestic premiums still elevated. Natural gas volatility has faded after a winter storm spike, and Europe faces a weaker demand outlook with an incoming wave of liquefied gas. Looking ahead, the calendar is relatively quiet today. Focus turns to the RBNZ decision on Tuesday local time, UK inflation and jobs data in the days ahead, and Canada's inflation print. For markets today, watch the New Zealand dollar against the US dollar with an upward bias if the central bank leans hawkish. Keep an eye on euro sterling for a continued drift lower, while UK data are awaited and Eurozone output underwhelms. Dollar lira remains a gradual uptrend story as skepticism and weak flows weigh. Dollar CAD could bias higher if softer inflation headlines dominate, alongside weak housing. In commodities, crude may trade a range as Iran diplomacy trims risk premium, but China's buying and a slower U.S. shale backdrop lend support on dips, while European natural gas retains a softer tone with more LNG arrivals. In short, risk sentiment is constructive but cautious, with energy flows in flux and policy signals doing the guiding.
That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.